While we certainly didn't have robust gains in the stock market today, we did have enough of an upward ascent to achieve 3 new all-time highs in our 4 major U.S. equity indices. We'll talk about that. We'll also talk about some of the news stories here today. We saw that Sprint and T-Mobile are likely to get the green light on their merger, and those stocks went higher today. We also saw some news that the United States government wants to start investigating some big tech firms. In fact, that'll lead us into our trade application example tonight, where we're going to go a little bit bearish with one of those names. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's February 11th, 2020. First off, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe. While you're over there, check out our description area and sign up for our email distribution list. We're also heavy users of Twitter. Feel free to follow me. My handle is @BrandonVanZ. Certainly appreciate those of you that click like and retweet on those Market Outlook related posts as well. And then finally, we have a presence on Facebook. Feel free to join our group at the web address embedded in the logo in front of you. All right, let's go ahead and jump into our charts. As you can see, I've got chart 4B pulled up here in front of us. And this will give us a nice high-level overview as to what happened with the stock market here today from the 4 major U.S. equity indices perspective. And as you can see, things were reasonably strong today. They didn't end as well as they started. In other words, we did have some longer upper shadows that we're going to have to deal with. But nonetheless, as you're looking at these different charts here in front of you, you can see this high label shows up right there, and right there. So with the S&P 500, the Dow Jones Industrial Average, and the NASDAQ Composite, we hit all-time highs, at least on an intraday basis. Closing highs were awarded to both the S&P 500 and the NASDAQ Composite, but we didn't quite achieve a closing high on the Dow Jones Industrial Average. The Russell 2000 Small Cap Index was actually our best performing of these 4. It ended up being up by about 0.59% when it was all said and done. Again, be aware that we did have a long upper shadow on that candle today, but nonetheless, as you look at the background colors of all 4 of our charts here, they're all that deeper shade of green, which tells us that we still have a strongly bullish posture on all 4 of these charts from an intermediate term perspective according to the market forecast technical indicator. Remember, the way that you would read that is effectively look at that green line on that market forecast indicator, and if it's either traveling up between 20 and 80 like it is with the Russell 2000, or just simply in the upper reversal zone like it is with the other 3 charts, we consider that to be bullish. And if it's, as long as it's above 50, it's strongly bullish. So you can see the difference in the shading here. For example, with the Russell 2000, a couple days ago, it was that lighter shade of green. It did change to that darker shade as of yesterday because the green line then went above 50 and is making its way up there towards the upper reversal zone. So be aware that the NASDAQ actually has the green line falling right now. Notice that in the label there it says 94.38 and falling, but because it's still above 80 and in that upper reversal zone, we still consider that to be strongly bullish. But nonetheless, just be aware of that because more times than not, we've been kind of seeing some of these lines rising, not falling. So perhaps getting a little bit long in the tooth with this move that we've seen here more recently. And wanted to bring up a couple of those news stories I was mentioning and kind of give you a sense of how they affected the stock market here today. So let me kind of right click and maximize one of these cells so we can see this information a bit better. I wanted to first talk about the Sprint and T-Mobile merger that was first addressed here this morning. In fact, yesterday morning, we actually talked about T-Mobile in my top-down trend trading class as a potential trend trading candidate. One day later, you can see that stock really erupted higher, up 11% on that announcement here this morning. That stock now has a strongly bullish posture. It's had a strongly bullish posture since a few days ago after its earnings announcement, but today was kind of icing on the cake with that announcement of that deal to potentially go through. Another stock that will, of course, be mentioned there is going to be Sprint. That particular company was up 77% today. Now, mind you, this is a very small price stock. This is only an $8 stock, even after today's 78% move. So a lot of people were not necessarily expecting the deal to go through, or at least they weren't expecting it right now. That is quite the ascent for this particular company. So Sprint shares off to the races, sprinting higher, as it were, up 77%, and of course having that bullish posture here as well. But one play that a lot of people don't necessarily think of right off the bat with these companies is what that means for the cell phone tower REIT companies. So let's talk about AMT here for a second. This is American Tower Corporation. This very well might be the biggest REIT out there these days. It used to be that some of the big property REITs like Simon Property and some of those were the biggest on the planet, but they've actually passed the baton to these big cell phone tower REIT companies. Their market cap has grown tremendously in size, and today it tacked on an additional 4% here, as you can see, off to the races there with AMT as well. And that was a stock that was already in a pretty decent uptrend before today's move. SBAC is going to be another one, and that one was up even more. Now SBAC has a market cap that's smaller than AMT, so all else being equal, it's probably got a little bit more momentum both on the upside and the downside. When you think about a smaller company versus a bigger company. But similar to AMT, it had already been in an uptrend prior to today's move, and today that stock launched higher by 7%. And then last but not least, we've got CCI. This is Crown Castle, another cell phone tower REIT, and just like the other two, we were already in an uptrend, and then boom, today, nice icing on the cake as this stock was up over 5%. And by the way, this one actually offers a pretty solid dividend as well. The other two, a little bit more mediocre, but this one offers an above average type of a dividend yield like you would traditionally expect out of a real estate investment trust. So that was one interesting story, Sprint, T-Mobile, and what that means with some of those ancillary plays. Another big story here today was the expectation that the U.S. government is going to start investigating a lot of the acquisitions that the big tech stocks have been making over the last decade or so. And so some of those stocks were affected, some of them were not. I don't believe Amazon was. They were named in that. Now you will see that Amazon had a big move up to start the day and did pull back. So we didn't close near the high. We closed about $35 per share off of the high. Nonetheless, Amazon was still up at the end of the day. So that was not necessarily one of the big scary ones out there. Apple was also mentioned. And so let's take a look at Apple. Apple ended up finishing down. It wasn't a terrible performance, but nonetheless, Apple down 0.6% there. And it's kind of been just tracking a little bit more sideways here in the last, let's call it, month or so. Another stock that was mentioned is Google. And this is Alphabet, if you want to give the proper holding company name. And you can see it's somewhat similar to Amazon in that the stock didn't sell off in a big way, but it did close well off of its highs that it was setting earlier in the session here. In this case, it touched nearly 15.30, and it sold off about $20 per share to end at 15.10. So with those out of the way, let's now kind of talk about another one that did get caught up a little bit more so. In fact, there's two of them. One of them is going to be Microsoft. Now, Microsoft has been on an unbelievable ramp higher. In fact, some of you might have seen me tweeting back and forth with one of my students here in the last 24 hours who had the good fortune of buying Microsoft in one of my classes a few years ago for dividend growth investing, way back when people hated the stock and it had a 3% yield. And she ended up turning her investment into a quadruple over that time period. So the success in Microsoft has been nothing short of astounding. But at some point, you got to figure it's going to stall out a bit, and it makes you wonder if a story like this that is pretty substantial, it's the U.S. government investigating whether these big tech companies have too big of an advantage. Who knows? Maybe this is a time where they start tapping on the brakes on it a little bit. But you can see that this is a pretty ugly looking candle that this had here today. It was down over 2%. Now, obviously, we're still up tremendously over the last, even on a year-to-date basis. We're still up 17% on Microsoft in just the last month and a half. So despite today's pullback, the trend remains firm. It's just we want to keep our eye on that situation because that is the ugliest looking candle on this entire board. It's the largest red candle that we see. And then last but not least, Facebook. really got hurt here today as well, as they were also named in the government mentioning there. And of course, Facebook is famous for not only their namesake company of Facebook itself, but they own Instagram and WhatsApp and a bunch of other companies, some virtual reality companies and different things like that. So Facebook has been highly acquisitive in the last decade or so. And the fear, of course, is, potentially if the U.S. government starts feeling like these companies are getting to be too powerful and not, announcing the data and the information around the acquisitions, that perhaps the U.S. government will try to break them up or at least make them stop purchasing other companies if they feel like it's an unfair advantage. So anyway, we're going to keep our eye on that story, but you will see that Facebook was kind of one of the worst performers here, down over 2%, nearly 3% here today, and has been spending a little bit more time below that moving average than above it here in the last, let's call it 2 or 3 weeks. So we're going to keep our eye on that story because that is a big one. If there's one thing that kind of defines the era that we're in right now, with the S&P 500 hitting all-time high after all-time high, despite the rest of the world not necessarily doing that, it's that the biggest companies in the United States continue to be in the strongest trends. That's not always the case. There's plenty of eras where the smaller companies are leading the way, but that's not really the era we find ourselves in. This is the era of the big fish, and they've certainly grown bigger as the years have gone on, and starting to get a little bit nervous. At least some of the governments around the world are getting a little bit nervous that those fish are a little bit too powerful for their own good. So we'll just have to keep our eye on that story, see where it takes us. But that has really been the growth engine of the U.S. stock market since the S&P 500 is a market cap weighted index. It's really been the growth engine of the market over the last several years when you see, your Microsofts, your Apples, and your Googles of the world doing as well as they have. So it is an important story. It's one that we want to keep our eye on, along with everything else that's going on, whether it's Fed testimony, whether it's coronavirus, whether it's just normal earnings that are taking place. There's a lot of important stories out there, but this is certainly one that I want to keep my eye on. All right, let's get into a few more charts here. I'm going to come on over here now to our 3 green arrows chart. This will be chart 4D. And as you can see at this point, we continue to have 3 green arrows on all 4 of our charts. We know that quickly from a visual because on this chart 4D here, you'll see the background color of the chart on all 4 of those is currently green. So that's telling us that the prices are above their 30-day moving averages. We've got our MACD histograms above the 0 line telling us that those indices have some form of momentum. And then we also have the stochastics going a bit higher, letting us know that prices have been closing in the upper half of their ranges here more recently. So those are generally considered bullish conditions. Obviously, when the stock market's hitting all-time highs like it did today, you don't need me to tell you that, but if you needed extra confirmation, then you've got this 3 green arrow chart to help you along with that. All right, let's take a look at our 1040 crossover method chart as well. This is our longer term chart, and remember that this is a chart that a lot of folks will use if they can't be too aggressive with when they're applying their capital. A lot of people, like if they have a 401k that only allows them to trade once a month or something along those lines, they need to kind of look at the markets in broad strokes. They can't obsess over the minutia of the day-to-day movements like you're able to do when you're watching these videos every single day. But this will give you a general sense of where the trends are heading. And each one of these charts here are 3 years in length, and each one of the candles you see are 1 week in length. And so what we're looking for is, where do we stand currently in relation to where we've been in the past? And right now we have bullish trends across the board. The crossovers are way in the rearview mirror at this point. The most recent one that occurred was back here in about October with the Russell 2000. At that time, we did have a bearish crossover that converted into a bullish crossover, and of course, we've remained bullish ever since. All of the other 3 charts have been bullish even longer. For instance, up here on the Dow Jones, we've been bullish on the Dow Jones with this particular strategy since February 11th of 2019. So with today being 2020 on February 11th, we're basically at our 1-year anniversary here of that bullish crossover that took place using this 1040 weekly methodology that we show you fairly regularly here in these videos. So a bit long in the tooth, obviously, but nonetheless, it does at least show you the benefit of kind of keeping your eye on the bigger picture and not necessarily getting caught up in the day-to-day noise. These charts have done a good job of keeping people on the right side of where the market has been taking them. All right, let's go ahead and now take a look at some 12 grid analysis, starting with chart 5A. This will be our asset class 12 grid. Now, as we're taking a look at this, you'll see that they have different colors as far as the backgrounds of the charts, and those colors distinguish between whether we have bullish or bearish postures from an intermediate perspective on the market forecast, and then depending upon the shade, they can either have weakly or strongly bullish or bearish postures. So, as an example, up here on the top, I'm kind of circling EEM. It's the third from the left on the top there. EEM is the emerging foreign stocks. You can see it's got kind of that lighter shade of green, telling us that while we do have a bullish posture, according to the market forecast, we wouldn't consider it a strongly bullish posture. It's considered a weakly bullish posture. And I think that makes sense in my own head as well, even if I know nothing about the market forecast indicator. At least what I can see visually here is that price, while it has risen nicely in the last couple of weeks, it is still below a falling moving average. Notice that that moving average line is colored red, which signifies price below a falling moving average. Whereas the chart directly to the left of it, this is also foreign stocks, but in this case, these are the developed markets. So these will not include China and India and some of those other important emerging markets, but they will include, Japan and Australia and continental Europe, etc. You can see here we have that deeper shade of green, and again, it kind of makes sense in my head. Even if I don't know a whole lot about the market forecast indicator, at least I can see here visually that price is above that moving average at this point. So you can see that is the case with today's move of 0.68% higher. Notice that the moving average color changed from red to yellow. Remember, that signifies a little bit of a conflict there. What that's telling us in this case is that price is above a falling moving average. So you kind of have that yellow as almost a yield on a stoplight type of a situation. They're telling us that we're looking for additional information. If price stays strong and remains above that moving average into the coming days and weeks, then eventually that moving average will turn from going lower to going higher, and that moving average will then change to a green color. So we'll keep our eye on that if that is what is about to occur or not. But I think if you look at those two charts and then compare them to this chart over here, which I've already talked about, this is the S&P 500, I think it's still very evident that the United States is still the best game in town. Is it bulletproof? Of course not. There is no bulletproof chart out there. But when you're looking around the world and you're looking for, the quote-unquote safety trade in terms of equities, you generally look at the big liquid market in the United States as a safer place to be hanging out than a lot of the other countries around the globe. Now remember, you don't always have the most upside potential out of the big lumbering giant that is the United States, but nonetheless, it does have a time and a place, and right now kind of seems like one of those moments. So as long as those mega cap stocks that I mentioned a moment ago don't just completely sputter out of control to the downside, it does appear that the United States stock market does have the strongest trend out there, at least globally. Some of the other areas that are worth noting on this first set of 12 grids, take a look at preferred stocks. We did hit new multi-month highs there on preferred stocks today, and they've been in a nice upward ascent for quite some time. You also saw the REITs do reasonably well today. Now, one thing that I do want to mention there, a lot of REITs were actually down today. This looks a little peculiar. REITs did very well. They were up 0.76%, but that was directly related to what I just mentioned a moment ago. Most people are not going to pick up on that. But if you go through all the REITs, you're going to see a lot of them were down today. The reason it appears to the bystander that REITs did well today is because of those cell phone tower REITs. Remember, some of them were up substantially, like SBAC was up like 7 or 8%. And American Tower and CCI, they were up like 5%, right? So those are big moves out of some of the most important REITs out there because they are some of the biggest market cap REITs out there. So, that's one thing that's kind of cloaking the truth to a degree. We'll have to keep our eye on that story. The REITs have done reasonably well in recent weeks, so I don't want to make it seem like they're a terrible place to be, but just don't let this one-day performance of 0.76% fool you. A lot of that was directly related to the fact that the cell phone tower REITs were outperformers in a major way today because of a very unique one-time circumstance of basically Sprint and T-Mobile getting a green light. So be aware of that. USO, that's the ticker symbol we use to track oil. You can also use /CL, but a lot of people have their eye on oil these days, and we did have a little bit of a bounce in oil, but we've got a long ways to go. Remember, we've had a lot of these oversold cluster signals here in the last 3 weeks. At some point, you would think we'd get a little bit more of an oomph higher. Let's hope this isn't all that the market has in store for us, because that is pretty mediocre, to put it mildly, if that's the bounce that is to occur from these oversold cluster signals. So I think a lot of people are holding out some hope that there's a little bit more of an aggressive move higher there out of oil stocks at some point sooner rather than later. Let's go ahead and take a look at our next set of 12 grids. In this case, we'll come on over here to the U.S. sectors 12 grid. All right, so as we're taking a look at this here, you can see that we've only got one pink chart on the board, and that is energy. The aforementioned struggles of the oil patch have, of course, bled over to the oil and gas stocks themselves here in the form of XLE. And so you can see that just yesterday we had an oversold cluster in XLE. The stocks actually ended up doing a little bit better than oil itself today. You can see XLE was actually up 1.12%. That's a pretty healthy day, but then again, many of those stocks are wildly oversold right now. Remember that oil and oil stocks make up less than 5% of the U.S. stock market now. That is almost unthinkable if you would have brought that stat up a couple of decades ago because of the importance of oil along the way. But as the years have gone on, oil and oil stocks have become less and less a big part of the economy that we find ourselves in today. All of the other sectors are actually quite strong. All of them have that deeper shade of green, and as I'm looking at them, I think all of them except, there's one exception here, that is materials. All of them except for materials have price above a rising moving average, right? If you look at all of those moving averages, the tips of all of them, except for materials and, like I mentioned before, energy, of course, all the rest of them have green tips, telling us that price is above a rising moving average, and that's generally what you want to see if you're looking for good, healthy, strong, trending markets out there. Now, amongst all of those various sectors, there may be some that are more interesting than others. Again, be aware that this real estate, graph that you see in the lower right looks really strong here, but a big chunk of that move today was with those cell phone tower REITs. Remember, this product, XLRE, is slightly different than the one I was talking about a moment ago, VNQ, but nonetheless, the concept holds true because the cell phone tower REITs are going to be a big chunk of both of those ETFs. So REITs are a kind of a breakout type of a chart that's taking place right now. You could also say the same thing for discretionary stocks. Now remember, XLY, by far and away the most important component of it is Amazon, and as I mentioned before, Amazon kind of felt like a little bit of Teflon today. It really didn't go down on that announcement of the U.S. government requesting additional information, so maybe they'll be saved by that. But Amazon did not really keep up with a lot of those other big tech stocks a few months ago. It seems like Amazon has been a more current story where it's kind of been starting to surge a little bit more so in recent days. And I think it's even caught Jeff Bezos' eyes, because I noticed a headline earlier today that he sold about $4 billion worth of his Amazon. But assuming that the trend in Amazon continues to hold, then XLY will likely continue to go up right along with it, because Amazon is by far and away the most important candidate within XLY. Let's go ahead and pop on over to the internet for a second here. Wanted to show you the sector selector. There weren't a whole lot of changes here, so I'm not going to spend a lot of time on this today. In fact, this is one of the rare weeks where there were only 2 changes. You could really call them one and the same, because they basically replaced each other. But right down below here, discretionary, which I was just talking about a moment ago, did go up on a week-over-week basis. It went from number 8 to number 7 on my ranking system. And then that means that what was previously at number 7, which was the financials, fell back down to number 8. So basically, we just had a flip-flop there between discretionary and financials. Those were the only changes that we saw last week, and that is very rare if we have that small amount of changes. So for the most part, the trends that we have been seeing have largely been continuing, and there hasn't been a tremendous amount of sector rotation. However, with the big move that we did see in real estate here today, I would not be surprised at all if real estate does make its way a little bit higher on the ranking system when I put this together on Friday. Now, just as a quick side comment, remember, Monday is going to be President's Day. This graphic, sector selector, it's actually a 2-part graphic. This is the upper portion, is made exclusively for my Monday top-down trend trading class. We use it to help us establish good trades. Because we're not having class on Monday, sometimes I don't create this over the weekend. This weekend, I think I'll be around, so I think I'm going to plan on creating it anyway, but just be aware there's not going to be a class associated with it because of President's Day. All right, another thing, since we're over here, I wanted to tell you guys thank you, or say thank you. For those of you that clicked like the last time around, 117 of you clicked like for me when I did this video over on Twitter on, I guess it would have been Wednesday of last week, and therefore giving you kind of more full-length video here today, more of your traditional 30-minute version of it. So if you do get value out of these videos, you have an opportunity to kind of customize your viewing of my video the next time I do it. In this case, it'll be Thursday. Tomorrow, David's going to be doing the video, and that will be our kind of schedule going forward. He'll do Monday, Wednesday, Friday. I'll do Tuesday, Thursday. So anyway, if you guys can get me 100 likes between now and Thursday, I'll plan on doing another full-length video. If you don't want me to do a full-length video, don't click on anything. So that would mean that if you get less than 100 likes, then I'll just plan on doing a 15-minute version of the video. All right, so with that out of the way, let's go ahead and get on over back to the platform. And I wanted to bring up a stock that we've already talked about, and that is Facebook. And I want our trade application example to revolve around that here today. So you saw when I was bringing it up earlier, when I was talking about all those companies that were affected by the government report, that it produced a bearish signal or a bearish posture on the intermediate line. Remember, that's when the green line goes lower. So maybe I could bring that up just real quick, just to, because I know sometimes it's hard to remember what I've gone through already. So let me just show you here real quick. If I were to come over here to chart 4A and then pull up Facebook, this is the intermediate term view of our charting system. Notice that it went from a green background to a red background color today as a result of this 2.7% pullback. You can also see that the moving average turned to red, telling us that price is now below a falling moving average. Yesterday, price was below a rising moving average. So the pull down in price was enough to actually pull the moving average down here today as well. Well, not only that, but you can see that the dotted line, the orange dotted line back here, we don't talk about it a whole lot. That's the longest look back period with the market sentiment line. It actually just recently went to a bearish posture as well as it went down below 80. And then what I was showing you a moment ago is if I came over here to chart 3A where we emphasize the blue line, and this is the chart we tend to use for my swing trading class that I have on Wednesdays. You're welcome to join me tomorrow if you're a premium member for that. this is going to emphasize the blue line. And you can see the blue line went lower today as well and changed that background color from blue to pink. So a lot of different bearish elements entering into the Facebook chart all of a sudden, and much of it is likely a result of, that information we found out about today, that they're going to have to hand over a lot of their information regarding the purchases they've been making over the years of WhatsApp and Instagram, etc. So what I thought we would do is practice a bearish trade here tonight, and the trade that I'm going to set up is going to be the April monthly contracts, and we're going to do a bear call spread. So you can see the trade that I've got established down below here. I'm selling the 220 strike. I'm buying the 225 strike. That's producing a credit of $1.27 there for us. And if you're newer to this trade idea, what you're hoping gets accomplished here is that Facebook stays below $220. So it's a bearish trade. Back to the chart, you can see $220 is right up in this old congestion zone here. So if you kind of think that this is a new par for the course where it's going to spend more time below the moving average than above it, then this very well could be a trade that could be useful for you, and that'll get us done at a rate that's greater than a 30% return on risk as well. So confirm and send. Review that one more time. Everything looks good there. We'll send it off and we'll see if we can get filled first thing in the morning. All right, well, thank you for joining me here once again tonight. It was an interesting day in the stock market because of all the interesting news stories that were creeping up. But for the most part, the trends have been holding, especially here in the United States where we have more strength than we see overseas. So we'll see if that continues or not. In case it doesn't, there are some bearish trades that we could look at out there, including the one I mentioned here with Facebook tonight. So I hope you got value out of tonight's video. If you did, click like for me over on Twitter if you want an extended version of this on Thursday. If you didn't get any value out of the video, don't do anything. We'll get that message as well. So thank you so much for tuning in. I'll look forward to seeing you on Thursday, and David will be back with you tomorrow. Take care, everybody. Bye-bye.